The Federal Reserve convening its day one now of a two-day meeting. It's a biggie, and senior economics reporter Steve Leisman joins us now with the CNBC Fed survey. Mr. Professor.
Good morning, Andrew. Neither snow nor rain nor sleet nor gloom of night looks like it will keep the Fed from an expected decision not to cut rates at the January meeting. Take a look at what we call Fed expectations. Just 2 rate cuts expected this year. Have more to say about that in a second. And none are expected for 2027. The year-end funds rate, 3.13. There's your 50 basis points of cuts. But the likelihood of recession declining from 30% to 23%. It had been as high as 53 in the wake of the Liberation Day tariffs. And a decent contingent or a minority out there, 31%, do think the Fed should be cutting at this meeting. An improved growth outlook could explain why only limited rate cuts are forecast this year and next. Take a look at the average forecast here. GDP, 2.4%. That's well above potential of 2% or 1.8 and up 0.4 from September. CPI 2.7, coming closer to the Fed's target on a PCE basis. And unemployment rate unchanged at 4.5%, seen just rising by 1/10. Kathy Bastiancic, chief U.S. economist with Nationwide, writing in with the survey. We anticipate continued solid and more consistent economic growth in 2026, underpinned by fiscal stimulus and easier monetary policy. The rate outlook shows fairly even distribution among hawks and doves in our panel here, with a plurality in the center at 17. You can see there forecasting 50, and 9 see fewer cuts and 10 see more than 2. So pretty balanced distribution. And separately, while BlackRock's Rick Rieder leads in prediction markets, that's not the case in our survey. Kevin Warsh, the former Fed governor, he leads at 50%, with Rieder down low. Now, maybe some of these answers preceded this surge in the Kalshi markets, which are sort of inexplicable anyway. Hassett, the former frontrunner, down at 11%, and Governor Waller at 11%. But remember that, because asked who the next Fed chair should be, Waller once again topping our list with 44%. Warsh in second place, third in Hassett, and Rieder is in fourth place about who should be. It remains interesting, guys, that both the market and the survey show the Fed holding at around a 3% funds rate, even though President Trump will have his man at the helm of the Fed.